Diamondback Energy merging with Endeavor Energy Resources. That deal valued at nearly $26 billion. The shares of Diamondback are jumping on that news. It's the latest in, of course, a string of M&A activity in the energy sector. Joining us now is David Deckelbaum, TD Cowen, Senior Analyst. David, it is great to have you on the show, and you are just the man to talk to about this headline, David. So listen, first of all, just get your general take, David. You've had time to look at this news. Does it make sense to you, David, kind of financially and strategically? Certainly investors, they like it, David. I look at Diamondback Energy, it's up here about 9% in today's trade.
Yeah, no, it's a great point, and thanks for having me. Yeah, Diamondback's up 9% today. Obviously, investors like it, but if you were looking for a perfect deal, this is really it, just sort of at a very high level, right? You're checking all of the boxes. They're increasing their production by almost 70%. They're increasing the number of locations by over 60%, the wells that they can drill over time. And this is a company that's right in their backyard. So there's so many logical synergies there, but you're practically buying the same sort of acreage that you have now. So you really have no degradation performance. Valuation was very reasonable. And now you've just really scaled to now be the third largest producer in the Permian Basin.
David, it has been just crazy, the amount of deals and the size of the deals that we've been seeing for new shale, or not new shale, but to buy new to these companies shale. There's the list of the deals. Again, on a high level, what is driving this sudden surge of activity?
Yeah, I mean, I really think there's probably two big things. One is that the market becomes fast followers, generally speaking, right? I think once the music starts, you start worrying about the music stopping and not having a chair to sit down on. But I think this really gets back to beginning in 2018, all of this energy complex was pushed by investors to start returning capital to shareholders, which means no one's growing production anymore. Everyone's just kind of cutting costs, reducing capital spending, and then giving that excess free cash back to shareholders. In the first several years, we saw massive outperformance in the energy index. Right in 2022, 2023, it underperformed. And I think a lot of this now gets to the point of if you've already initiated this huge sort of dividend and variable buyback and variable dividends program, this return of capital program, without growth, how do you create value? You create value through M&A.
And so, David, as you look, ahead here and maybe potential M&A activity coming in the pipeline, before getting to possible targets, David, I'm also curious who you think, the potential acquirers are. Because I look at some of the names, and correct me if I'm wrong, but, you can look like an Exxon or a Chevron, David. I would think those folks would probably be sitting on the sidelines now, given kind of the deals they've already committed to. So who do you think would be potential acquirers in the quarters ahead?
Yeah, I mean, look, you certainly have some names out there that have a business model that sort of goes against making large scale acquisitions like this. I think EOG has always done things more or less organically speaking. Now, ConocoPhillips is one that hasn't done a large deal in a while. I'm sure that ConocoPhillips is one at top of mind for folks of just a name in the space that could conceptually look for some bolt-on deals here. To your point, Exxon and Chevron are probably going to be on the sidelines, I'd imagine, digesting, obviously, Pioneer and Hess, respectively. You have a few others out there, sort of an independent land. Devon Energy has certainly been, I think, mentioned as one that's been looking at deals. Coterra is one that said in the past that they'd looked at many acquisitions. And then you have some other smaller cap names as you get into companies like Ford, I think, that look for consolidation opportunities in other areas like the Bakken. But, right, I mean, you've seen so many names in the Permian kind of coming off the board here. There aren't that many other places to look as to what's obvious in terms of what's next.
Well, David, so how do you play it then as an investor? Do you look to some of these larger players as they digest these big deals? Is that indeed going to be successful in adding value for shareholders, or do you try to game out the stuff that hasn't consolidated yet?
Yeah, I think that's a great question. And honestly, in many cases, we advise clients to just leave M&A out of their thesis, because we aren't seeing premiums in terms of takeouts for public names. Even you look at the case of Pioneer, you look at the case of Hess. Premiums for takeouts were very minimal in those cases, and these were effectively all equity deals. You look at Diamondback, they're buying a private company, 70% equity deal. I think that we try to tell folks, look for names that actually have the license to go out and acquire and have done a good job doing that in the past. And that's why Diamondback has been one of our top picks for the last couple of years, is this management team has a history of extracting a ton of value through acquisition. And I think this Endeavor deal just kind of follows up to what they've been doing in the past. But I think as you look forward, you have to look at names that really have superior inventory life, that don't need to be out there in the market necessarily looking for something, and have this visible runway of returning capital to shareholders.
Hey, David, one last question. I want to get you out of here on this, on Diamondback and Endeavor. David, sure. I'm interested, how do you think regulators respond to that, David? Do you foresee any kind of issues there?
I would imagine it goes a normal course of business. We get asked this question a lot, but I think, independent oil and gas companies, they don't control the market. Even though they'll be the third largest producer in the Permian Basin, one, I think if you're not going to have scrutiny around Exxon and Pioneer, that kind of gives you a decent insight into the lack of scrutiny around this deal. This company will not control the marketplace in the Permian. They're not going to be impacting gasoline prices at the pump. I'm sure it'll go through the normal review, but I wouldn't expect a whole lot of antitrust pressure against this deal.
David, it was so great to have you on the show today. Thanks so much for joining us.
My pleasure. Thanks for having me.